Hello everybody and welcome to part 2 of liquidity. In today's session we're going to go over how to spot liquidity and what does liquidity look like. So let's begin. Areas of liquidity look like areas a retail trader will most likely enter from. So you guys know that is your support and resistance, your trend lines, and so on and so forth. Equal highs and equal lows, support and resistance ranges, trend lines on the relatively lower time frame, right? And there's a reason why I say it on the lower time frame. So let's begin. Now okay, so with so let's just go back to here, areas of equal highs. Okay, so we'll begin with equal highs and equal lows. So equal highs and equal lows, right? Let's just go on a practice diagram first. So let's say we've got some price action here, just price, and then let's say just about here, right? So at this point there are equal lows, right? So if I just make this a bit more perfect, so over here what do we have? We have lows which are equal. That's why it's called equal lows, very simply. So if we just mark this out as equal lows, now what equal lows are is basically a longer version of support, right? So it's just two lows which are at the same point or near enough to the same point. So it could be, a little zone of equal lows, or it could just be they meet at the same point, so it's formed almost a double bottom, right? And this is an area in which a retail trader will trade from. So it's an area of liquidity, right? And so yeah, and those highs over here, let's say all of those met at the same point, these would be areas, or it will be equal highs. Why? Because they are three highs at an equal point or near enough to be an equal point, right? So those are equal highs and equal lows. Support and resistance, I'm sure many of you are familiar with. It is just an area in which price comes to around the same point, on both sides of the market, right? So let's say price was just doing its thing, right? And before this point, we didn't have any support and resistance. However, we then went into support and resistance range, right? So support and resistance is usually not at exactly the same point. That's what differentiates it from equal highs and equal lows. It's rather a bit of a zone, right? So that would be your resistance, and then this would be your support, right? So that would be your support, this would be your resistance, and these are both areas of liquidity as well. Now is there anything else? Okay, so trend lines, I'm sure you're all familiar with as well. Let me restart that. So trend lines are basically support and resistance, but in a direction, right? So for example, it's quite hard to do it with the tool. So this would be an example of a trend line. It is support and resistance, but we are on an upward, trajectory, and the same way if we were going downwards, right? So that is what a trend line is. So I'll just show you the downwards. There we go, that's a bit better. Okay, so that is a downward trend line as shown here, right? And these would be areas of liquidity as well. But the main thing you want to keep in mind is you want to use the trend lines as liquidity, but only on the lower time frames, right? Because on the higher time frames, if I just show you guys, on the higher time frames, trend lines can be used as a direction whether to buy or sell, in terms of using it for your order blocks. For example, let's say we found an order block at this point, right? And we were looking to enter from this point. So didn't mean to do that. So let's say we're looking to enter from this point, right? And we could have used the trend line over here as a direction to us, right? We are in a bearish market, and so also we can use this trend line, and I'm going to go over this in the market structure section of the course, but I'll quickly go over it. Let's say we were at this point in time, right? And we were looking at price from this trend line. At this point, let's say for example let's just say at this point, right? you wouldn't want to buy the market. Why wouldn't you want to buy the market? Because it's so far away from this trend line that it's been respecting, right? So, or even for example over here, you wouldn't want to buy the market because it's so far away from this trend line that it's been respecting, right? You don't want to use this trend line as a place to buy from, but instead as a direction, right? You don't want to buy at this point because we're so far away from the trend line. It's been, you know, respecting so far, right? It's been respecting this trend line on a higher time frame, and so this would be useful, right? But you also don't want to use trend lines. So that's the use of trend lines on a higher time frame, but on the lower time frame, so for example the 5 minute, you do not want to be entering, you know, from areas such as this one. Why? Because it will be taken out, right? And your entries are not great, and this is an area of liquidity, right? So smart money will grab this area of liquidity, and there we go, literally a random point creation of an order block, right? If I go on to the 3 minute, it will be an order block, right? Or even the 1 minute, right? So look, there is an order block literally right here after that grab of liquidity, right? And then you could have entered from this instead of entering from, you know, from this, for example, right? And you wouldn't have got a great entry. Instead, you could have entered from something like this, so take profit somewhere here, right? Perfect. So that's exactly the way you want to be using trendline liquidity on the lower time frame and not on the higher time frame. And so yeah, I hope you guys found this one educational, and I'll see you guys in the next one.